Adam.
Microphone. Okay, Dale.
Oh, there you are, buddy. Okay. So
throw that
welcome
on.
back.
Well, glad to be here, Dale.
All right. So did you want to? Oh, there you are. Okay. We can see you.
Yeah.
All right. You want me to put my charts up, Adam?
Also,
while we're going around?
Want. That'd be best.
Okay. So great to see you.
Good to see you, Dale. Things are lively in the markets. I was tuned into your conversation there just now. It's an interesting day.
Yeah, and ECB. I'd like to start with Adam. If you really think that what we had in the euro was more than just a short covering rally from 103.5, could this be just a consolidation? And if the ECB disappoints, a break to buy?
Well, I look at the RBA today. They come out with a 50 basis point hike, and we rallied for 10 minutes and gave it all right back.
Yeah, there it is.
So I don't know if you can really use that playbook tomorrow for the ECB. I think the market's telling you it wants to buy dollars, sell yen. And that central banks, maybe that if it's 50 now, 25 now, we're looking at terminal rates, and maybe a little bit more hawkishness now leads to lower terminal rate. So that what I mean by terminal rate is the top end of, I sort of explained to others, but
and also haven't they been moving the timeline of when we get to that terminal rate has been moving closer.
Exactly. And then, and central banks talking about maybe easing afterwards, so the RBA talking about, inflation falling back down later, or Bullard, even the Fed hawk saying, okay, maybe if we hike, and he's talking about some pretty aggressive hiking, but then maybe cutting later. So you start to think about, okay, what are the mechanics of the next move after we get to this terminal top? So, I sort of sniffed out an Aussie, something a bit more hawkish, and I wouldn't be surprised if we see the same thing out of the ECB. We look back at these global central bank get-togethers, and it's almost like conspiratorial, but they pivoted. They got back together in March or April, and everybody's been more hawkish since. Now, they moved together in general, so it's not necessarily that they had a meeting, but over the last 10 years, we've seen a lot of this. Where you get these paradigm shifts out of events like that. And, perhaps it was the Bank of Japan saying, hey, listen, we're not going to play ball. I think they got together and said, listen, we've got an inflation problem. And we have to tackle it together. Because if you have, everything's global now.
Why is it?
Supply chains are global, demand's global. And if you have just one, if the Bank of Canada, say Canada has an inflation problem, if they were omnipresent and saw this brewing ahead of everyone else and had a hiked rates to 4% in Canada, it really wouldn't have made that much of a difference for Canadian goods prices because everything's imported. So if everyone's not doing it together, it doesn't really work as well. So everybody came out and said, we're going to do this. Japan said, no, we've been fighting.
What's their resistance to it, Adam?
Well, listen, I'm shocked. The data comes out month after month, and I don't understand how Japan doesn't have more inflation. They import everything in terms of commodities.
Yeah.
The latest data has been ticking up. I think in Tokyo, they sort of report a month ahead of the rest of Japan, or a few weeks ahead of the rest of Japan. It's 2.5% year over year. So that's something in Japanese terms. But you have to assume the prices there are going to go up, same as everywhere else. I mean, it's staggering to me. But I think that's the trade once it happens, right? That's the big headline of the next few months, is that Japan says, okay, we're done with the craziest quantitative easing in the world. But until then, and the market's just screaming, sell the yen. I mean, it's day after day after day. Good risk appetite, bad risk appetite. I mean, the rest of the equation just doesn't even matter. I thought we maybe
the other correlation. Sometimes it pressures gold, maybe again, but I want to comment on this. You believer is a pretty tight correlation between U.S. dollar yen and 10-year yields?
Well, it is. It's there, right? I mean, we're not at new highs in yields, though. I mean, 320. So 320
which one's
was
right?
High.
Yeah, that looks like a. Yeah, what do you think?
So is maybe dollar yen's leading it? Is that? I can't believe that. I mean, I think you just have this independent yen weakness on top of it. So that's probably half the equation. I mean, you can see the sort of the daily direction is there. I mean, if we look at the last, what is that, 6 or 7 candles all higher, although not today, right?
Right.
And yields moving up. So I think that trend is a nice sort of confirmation. If you were looking for
it's
a
the first divergence where the yen has made new highs without the 10-year doing it. Because back here it did a month ago when the yen was making new highs. This is the first time it hasn't with the yen advance.
And if you're probably just looking for the one-way side of that right now, right? If the trend's higher in dollar yen, the trend's higher in yields. We had those 3 doji stars. Maybe that was the time to sort of look at it. Same kind of thing in dollar yen. I mean, again, I thought maybe we'd get a bit more of a retracement. That was a pretty big move in March to May. And how much did it come down? 130 to 126?
Yeah, this was nothing. It was more of a time correction.
Yeah. And the power of this move coming through right through the top, right? Barely slowed down. And I think, I don't know. It's one of those things where you look at it and said, why am I overthinking this? I mean, there's some sort of imbalance here. A bit of jibber jabbering from the Bank of Japan or the Ministry of Finance in Japan to try to slow down, but they're, they don't care. They're an export oriented country.
Yeah. I mean, and great call. I remember you were bullish, the Canadian and the Aussie. And so the commodity currencies continue to reign, but even when I look at the Aussie here after the RBA, so it looks pretty vulnerable for at least, some give back here of this advance.
Yeah, you kind of hope we're in an era of sort of central bank divergence, central bank driven, old fashioned currency market. You go where the central banks take you, maybe get one of the, when we had Aussie rates at 7%, some real carry. And now
when you were a child and I was in my prime. Those FX markets,
when you have real divergences, right? Like real carry. And you think it would be developing, right? 50 basis points here, 25 there, but it's just not materializing in that way. And maybe the technicals play a bigger part, or we're looking at China. Seasonals, I know you like when I talk about seasonals in June, are positive for the Australian dollar. I mean, we're kind of started out that way, but back to about flat here now. I'm interested to see how this shakes out. Maybe we hear a bit more from the RBA, and get, you have to assume that they're going to be a bit more hawkish going forward from here, regardless of what they say. So, let the dollar's really on the boil here. Allow me the dollar yen flows working into that, or maybe we wait till after the ECB for it to shake out. But I do like the Aussie. On
the long side.
And you mentioned CAD.
Yeah, and CAD. Commodity currencies are way ahead. If the dollar has bottomed, peaked, and the euro's bottomed too, the advance is definitely, if you look at relative strength, led by commodity currencies.
Well, I got to wave the flag a little bit. CAD is the best performer this year.
Yeah.
And that is with the housing market that's, really coming undone here. So
let me get my violin.
I don't think the market really cares about it yet, and I'm not sure why. I think there's there's a lot of bearish talk.
It's probably denial, though.
There's a lot of bearish talk about housing everywhere. And I really openly wonder, okay, what happens? Say your house goes from like 500,000 or 600, say in 2 years since the start of the pandemic to $1 million, and then go back to $800,000. Do you really, is that really that much of a wealth effect or spending effect or trickle down effect? Like, for sure, you have less flipping in real estate, and everybody kind of lost $200,000 of wealth, but you'd think that'd be negative. But I don't think a lot of people borrowed against it. So I'm just thinking about that out loud. What do you think?
Well, I think that if they really want to take the housing market down, they should change the laws of interest rate deductions. And I think you'd see a lot of supply hit the market. Yeah. I think right now people are in at great rates, especially the past couple of years. Even if they lose appreciation, where are they going to go?
Well, I'll give everyone a little bit of a lesson about exactly where you're going to go. About Canada. So we don't have interest rate appreciation, and we don't have 30-year fixed loans.
Everything's you don't write off interest.
Can't write off it. Not like in America.
Okay.
And so everything's on either variable rate loans, which is about a third of the market, or 5-year term loans. So you can get a 5-year fix. So that, we have 20% of mortgages resetting every 5 years.
Okay.
Or every year, sorry. So people will feel it, and they're going to feel it a lot. I mean, the Canadian 5-year in the last, I think 10 days is up like 130 basis points or something crazy like
their
that.
payments are going to be up, 25, 40%.
And house prices in Canada, I mean, I'd say relatively are probably double what they are in US. If you take kind of the same town, adjust for this and that. It's insane. So, I mean, like I talk about $1 million houses, they're not impressive
nothing.
houses at all anywhere. And it's not just Toronto, it's everywhere.
Right.
And if you're paying 5% on $1 million house, on $1 million mortgage, it's 50 grand a year. That's a pretty big hit to discretionary spending. But the market doesn't care about that. Sort of, I maybe spoke too long on that. It seems the market doesn't care about that. We had trade balance out just now for Canada. It was a little soft, but it's going to be very strong. And I think the market right now is just looking at oil and saying, this is a runaway train. We talked not that long ago, and I said, listen, I'm bullish oil, but we've got China locking down. We've got worries about a global recession that are very real.
You brought up, we were talking about China lockdowns before the Olympics. Okay. So, we brought it to my attention. The one thing you were worried about were the lockdowns. So did you get the market effect you thought you would get from the lockdown? I mean,
that's sort of, I mean, in a way you kind of snag, you had to wonder how central banks would respond to it, right? So you kind of snarl supply chains again. It's a bit more inflationary, commodity prices. But one of the things you would look at and say, listen, oil's got to be pretty vulnerable. I mean, Shanghai not driving. I mean, China probably took, I don't know, 1 million barrels a day, 1.5 million barrels a day out of demand.
And the market kept drifting higher.
And so if you were to construct a bearish case for oil over the last couple of months, with an SPR release, more OPEC inventories, China lockdowns, global growth fears, and what happened to oil?
Yeah.
I mean, it's unbelievable how strong oil is going to an all-time high. I mean, Goldman's out today bullish, and Kramer's bullish. So take that for what it's worth. But
how about Gartman? Is he long of? Is he long of oil or short of oil? He was using.
You know what? In yen terms, I think it's a good trade in yen terms.
No, in shekel terms.
Shekel terms.
Yeah, converted for me. All right. So, what about the schizophrenia in the metals? What do you have seasonals here in gold and silver?
Yeah, not a lot going on there in the seasonal trade in gold. There's really that start of the year, you're supposed to get the strength in gold. Yeah. Kind of did. It's come out now. The dollar's very strong. And if you are to, point out that in other currency terms, gold has been a pretty good trade. I mean, if you were in Japan, you bought, maybe not as good as just straight dollars, but you look around, I mean, that's a geopolitical trade. You think there's talk now, Russia trying to secure more gold.
Yeah.
It makes a lot of sense for current, enemy or not unfriendly nations of the US to be trying to invest more in gold. And so there's a tailwind there. It's kind of holding up, but it just isn't capturing the imagination of anyone. And I think that's what needs to happen. And I kind of have a hard time seeing how it does.
Okay, here's how. Because everyone's still embracing that the dollar's still good and we're going to blow to new highs. But, this rally so far doesn't look that great to me. And if yields are peaking here, up here, I think this could be a failing rally in the dollar. And, I think gold's more of a monetary hedge than an inflation hedge anyway.
Well, and, there's a lot of that going on.
It's got to be about the dollar. If we're going to have a bull market in gold and silver, it's got to be about a dollar issue. That's the way it looks. And no one's embracing that the dollar has peaked yet, even though we had one sell-off. This is a break to buy to 110, right?
And I think, you look at this sort of years ahead, and this isn't a minority position anymore, or nobody's talking about it, but the commodities do look really, really good.
Yeah.
And, whether it's gold, whether it's anything,
especially the eggs. right?
Yeah,
I
the
mean,
ag's unbelievable. I mean, I think they've come off a bit. It's not entirely my cup of tea, but I mean, even metals are holding up pretty well for what we've seen. Similar to gold. I mean, copper did come off, but
yeah,
it should be even
copper,
more sensitive.
yeah. And
Um,
well, there's beans, and there's
beans,
corn,
beans in
and
the
there's
teens.
wheat.
Um,
So I think you get any kind of strong break in these, you got to own them, don't you think, Adam?
I mean, there's
Fed can't
this
print them.
sentiment now that okay, they're going to find a way to get Ukrainian wheat out of the country, but this is a tough one. And you hope they do.
Through Russia?
Through Belarus, maybe. I don't know.
No,
If
I
they
mean,
figure...
aren't the Russian troops going to bring it into Russia and then ship it to us?
What you mean? I mean, in the East, listen, I don't know all the mechanics of that. And the ports, it seems to me a difficult one to fix. They mine their own ports. And I mean, what do you expect Russia to clear those mines? Or I don't know, they'd be shooting at each other. So I don't understand how it's supposed to get out of their ports. And this war is escalating, right? They're talking about bombing infrastructure now, Russia. If they're not doing it already.
Yeah, it is escalating. Where do you think we're going? It's not going to be a stalemate?
I think, it's just the length of it is the only thing you can look at and say, well,
what a waste.
Well, and it just seems like I don't see an end to it. So it's just indefinite at this point. It doesn't look like I mean, Russia's making this slow advance, so that's progress. Ukraine's not losing territory too badly, so maybe that's okay with them. Nobody looks like they're at their breaking point.
Only one that's helping out are the defense contractors.
Yeah, well,
President Eisenhower, man, you called it, buddy. The military-industrial complex, man. Huh? Okay, so let's go to what's new in the world. Fairly new. They recently connected it to NASDAQ, but NASDAQ rallied last week without Bitcoin. What are they going to say it is? I know people just say it's a commodity.
Yeah, they're trying to pin it down on the regulation. And I can kind of see what Congress is saying that, well, we want to be innovative, but we need investor protection. And they just don't have a framework for that. And then you read the stories.
How are they going to get that done? They can't get anything done.
They can't get anything done. And, but it didn't come back with tech, which is tough.
Yeah, that's what I mean.
And you have a lot of the kind of gurus been embarrassed a little bit with some of the Luna stuff. People are licking their wounds. Technically, you would have thought you'd get a bit more, like even if you go to a daily there.
Oh, and the Bitcoin.
We tried a couple times, even yesterday, to go again, and look at that rejection. I mean, that's to last week, and then again yesterday.
Thanks for having me go to the daily, Adam, because the RSI is confirming down here.
It's not breaking down, but it looks like it kind of could break down here, right?
Markets don't bottom with a 24 RSI without any divergence. That low's going to be, we're going for it. So if we're going for it in there, maybe does the NASDAQ and S&P link up with it during this last push up in the bonds, because it looks like the bonds are going to make a new high. So isn't this kind of an acid test with rates pushing the highs to see which markets hold up the best under interest rate pressure?
Well, that's it.
Isn't that it?
Are we really going to change the trend here in June? I mean, let's take a step back and say, okay, central bankers are all hawkish. Energy is bullish.
Yeah.
Yen is fading.
Yeah.
The economy is having an inflation problem, probably near a peak. But it doesn't mean it's going to go down to 2%. It might just fade back to 4%, which is a problem. So we don't know where that's going to go. Rates, is 320 the high in 10? Maybe not. Now, you kind of held your back above 3. So, and if you do get above 320, you're going to need a big flush. And you look at some of the charts on stocks, big tech stocks, there's a lot of room on the downside to fall. So like you said, even with Bitcoin, is this how a market bottoms? I don't know. Usually you need the Fed, you need something. I mean, I don't.
There's Microsoft
And then, what does oil
Google.
do? I mean, we got these refining margins blowing out. The pump is bad. Elections coming up. They're going to have a divided Congress or divided whatever administration in the U.S. So,
No, and Biden's going to be a lame duck, which he was anyway because of a couple of
and so now is there any, and then I think maybe at some point you've probably looked towards a Republican administration in 2024 and say, well, that's going to be a clean sweep, and then they'll be probably cutting corporate taxes, and suddenly deficit spending probably won't be such a problem anymore. To get the economy out or whatever. That trade is probably 2 years away, a year away. And then you have Tesla up there. I think the tide has really gone out on Elon. Like the cult of Elon, I feel has kind of eaten
the Twitter
itself.
bid was it.
It doesn't look so smart on that, eh?
No.
So
he'll make it look that way. But
if he, listen, full credit. If he can get out of that one,
he's Teflon too. So we're going into the summer, a couple weeks left of the spring. What's your eye really set on for how you're going to capitalize on what may be? Do you think it's going to be a quiet summer, or we're going to have some action?
Yeah, there's really two trades I like. I like oil a lot. Gas to a lesser extent, oil drillers, like contract drillers, oil servicing companies. I mean, there's going to be a lot of spending going there. Because it just looks unstoppable right now. I like U.S. housing here. I think we're talking about price decreases. We're going to see it flatten out, and I think the trade on it is lumber mills. Lumber mills.
Lumber got down to 600.
Come down, I think, but if you look at home builders, I think that's probably for the average trader maybe a better take on it. One of those, the lumber mills, or it's 600 lumber is still 100% higher.
Just go the futures market.
I mean, 300 used to be a high price of lumber. So if
I was on the floor, I handed orders to those guys in the lumber pit on the old day. It was a click, buddy. It was a country club pit. You would not believe it.
I think the volume in lumber now, it's insanely low still.
It was. It's
an interesting market because I believe there aren't enough trees out there for the long term. But that's sort of a long-term secular trade.
They don't care. They just want to run your stop.
Fair enough. I mean, if you're trading something
the only paper they used to care about was the paper with STP at the end of it.
Nice.
Okay, nice. Buddy, because that was liquidity for them to take the other side. So, Adam, I hope you have a great summer. Really appreciate your time and everything, buddy. Future Forex Live, you guys are doing it. I see you're really doing a lot more on the education front, a lot of webinars, and you're one of the best news traders I know. Give me a piece of news we don't know about yet that we're going to hear this summer.
Yeah, I touched on, I think it's Japan when they make the turn, but I think we maybe get a blow off top in dollar yen like 145. I mean, so it's starting to look that way. It just goes almost no bid in the end.
Yeah.
So that would be the turn. And then for this week, I think the ECB being more hawkish. I don't think people have appreciated enough how they're hearing from the 8% inflation in Germany. Are you kidding me? You can't say we're slow rolling in from here. So.
You sound like Stelios, one of the guys.
But I don't know if it's that bullish for the euro because the economy is just garbage in Europe. Yeah. And you listen to leaders there, and Lithuania, I think it was, maybe Latvia. Sorry to mix them up for anybody from there. It's typical gringo move. But, they came out and said, it was about the Ukraine war, but they say, it's only money. It's only money.
Yeah.
And you think, man, do I want my leader saying it's only money?
Yeah.
You know what I mean? Like I get the broader point of what they're saying, but we need to do more. It was about the oil ban. So we need to ban oil. We're only need to pay another $10 a barrel for oil or gas or whatever it is. You think, do these people even care about growth? You know, do they even care about that average person, let alone the average Lithuanian who isn't very wealthy to begin with? They can't pay the bills.
Yeah.
You know, and I think at some point they turn on them because they say, listen, we support Ukraine, but I can't pay the bills here.
Yeah.
And I don't know how long we are away from that, but I don't think
I think it's already happening, Adam, in the US. And, you know, put that together with bull market and housing, with people who can't afford because they've been squeezed on rent and everything else, take care of a family. And you're right, there's a lot of that here in America.
You know,
You
it's
know,
only
that's why.
money. And nobody says that in America. Biden doesn't come out and say it's only money. Get out of here. So I think they're just so far out of touch in Europe. That's just this elite class that just wants to do everything green, and it's horribly misguided. Listen, I'm the first guy to want to electrify everything, but you got to do it right. You can't impoverish people to win a war in Ukraine. You can't impoverish your people to green everything. It doesn't work. They'll get angry. Yeah. So I think that's the where we're at. So I'm not ever buying the euro.
You know, I have a doctorate from Hard Knocks University, and I completely agree with you. Ever hear of Hard Knocks University?
Yeah. It's you made it out. You made it through the school, the regular school, up to the higher education part.
Yeah, and what a blast talking to you today, really. And yeah, look, we're gonna have some action this summer, and keep in touch. And everyone, you got to follow Adam on Twitter at FX_button, and see him do his thing on Forex Live with Greg and the rest of the team. And one of the best in the business, Adam Button, my trading warrior brother.
Thanks so much for having me on, Dale. Appreciate
bro.
listening to you guys earlier.
All right. Thank you, Adam. Everyone, they're all thanking you, Adam. Thanks for your time today, buddy. Okay, that's a wrap, everyone. I hope you guys have a good day. Don't just count your pips, count your blessings, and you could join the team, the dream team, in 14 minutes on the morning edge. Adios, my trading warrior brothers and sisters.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.